morning and welcome to the midweek edition of Business Morning on Channels Television. I'm Ini John McCoy and we'll be spending the next 55 minutes or so together exploring the world of business. Let's start from the oil and gas industry. Data from the National Bureau of Statistics indicate that the average retail price of automotive gas oil, that's diesel, paid by consumers in Nigeria increased by 181% from 238 naira 82 kobo in May 2021 to 671 naira 8 kobo in May 2022. Month on month, the average retail price increased from 654 naira 46 kobo in April 2022, indicating a rise of 2.54% when compared to the average retail price paid in May. The spike in the price of diesel had been partially blamed for the rising inflation in the country, occasioned by global supply gaps from the Russia-Ukraine war. As in the industry, oil prices dived more than $4 a barrel today amid a push by U.S. President Joe Biden to bring down soaring fuel costs, including pressure on the country's major energy firms to help ease the pain for drivers during peak summer consumption. U.S. West Texas Intermediate crude futures were off lows, but still down more than $1 to $105.48 a barrel. Similarly, Brent crude futures dropped by $3.87 to $110.78 a barrel. As the United States struggles to tackle soaring gasoline prices and inflation, the President, Joe Biden, is expected to call for temporary suspension of the 18.4 cents a gallon federal tax on gasoline. Well, let's leave that industry for now and go to the financial services. One of Nigeria's Tier 1 lender, First Bank Holdings, recently held its 10th annual general meeting, and the dividends announced was very pleasing and acceptable to the shareholders. This is how the event went.
FBN Holdings went through last year.
It's the 10th annual general meeting of the FBN Holdings PLC, bringing together shareholders both physically and virtually to do an appraisal of the company's performance for the year ended December 31st, 2021.
We have, out of the total of 189.
On the lineup of the event is the election of non-executive directors, resolutions on unissued share capital, as well as the appointment of audit committee members. The meeting also presents for approval by shareholders the appointment of the new Group Managing Director, Mr. Nnamdi Okonkwo. Following what they consider an impressive performance, shareholders will be getting a dividend of 35 kobo per 50 kobo ordinary share.
I hereby declare that the resolution to declare a dividend in the total sum of 12,563,352,477 naira, which translates to 35 kobo per 50 kobo ordinary share of the company, subject to withholding tax, with the dividend payable on Tuesday, June 21st, 2022.
This is a cheering news to shareholders who express confidence in the new board and in the future of the company.
The agency banking is the most successful in the country, and for governance, they have 7 independent non-executive directors, which is the first of its kind in this country.
The board maintains these results are a product of years of strategic planning.
What we are seeing today with NPL ratio down to 6.1 from the high of about 26-27% is a result of 6 years of consistent working that was done on revamping the risk management architecture.
Some people have said, oh, you guys reported 166 billion, that's the highest the bank has ever done. And the question they kept asking, how sustainable is this? The answer is simple. It was not accidental. If you even back out the recoveries, you see that earnings have improved. But more importantly, if you look at our Q1 numbers, we delivered profit numbers of 36 billion.
With an outstanding result of the first quarter of 2022, the reduction to 5% of non-performing loans, and the recorded improvement of the subsidiaries across Africa, the company assures its over 1.1 million shareholders of more fruitful days ahead.
We're staying in the financial services sector now. Proshare has released its report on Nigeria's banking industry with a focus on the case for refining Tier 1 banks. Oh, the First Bank is also one of those Tier 1 banks. So apparently, we're talking about First Bank and some other banks. The report, among other areas, highlights determinants of long-term profitability that will lead to the conversation of the impact of that profitability to the real sector and the economy. We have Abdul Kudus Isiaka, economist with Proshare, joining us for that conversation. Good morning, Abdul Kudus.
Good morning, Ini.
Yeah, I think the last time we had a conversation was on MPC.
Yes.
It would be nice to know, I mean, the impact of that MPC and all that, but I mean, that's not the conversation for today.
Yeah.
So tell us about this, your report on Tier 1 banks. Why? What's the essence of it?
Okay, so the idea behind, I mean, you went over the title, right? So the case for redefining Tier 1 banks, and so we could take the discussion from that point. So the idea is we want to, reconsider why do we, refer to certain banks as Tier 1 and other banks as not Tier 1 or as Tier 2, as the case may be. So basically, we went over the special banking report published by AfriInvest, a Lagos-based investment company, which was published in 2013. And that 2013 report actually speaks to a number of requirements, namely assets, especially assets. Of course, it talks a bit about, some prudential guidelines like non-performing loans and capital adequacy ratio and liquidity ratio. But basically, it draws the line between Tier 1 and Tier 2 based on asset size. And it stipulated an asset threshold of 1 trillion in 2013. Upgraded that to 5 trillion in 2020. But the question from us, I mean, we tried to answer a number of questions, ask and answer a number of questions, right? But the question from us was that why assets alone? I mean, as you know, there is no shortage of performance ratios we could consider where we want to analyze or determine the performance and the ranking of banks. So we probably want to look at, bank lending capacity ratios like CAR, LDR, even the capital, the CRR ratio, cash reserve ratio. There are also ratios. You want to look at, again, non-performing loans. You want to look at the asset quality. You want to, again, look at, so there is no shortage of ratios. So we're trying to come up with a methodology, right? And we actually have done that. A methodology that is quite testable and that scientifically selects, weights, and sums the most important determinants, most important ratios that speak to long-term profitability for banks. And so that's what we've tried to do. And so we're also canvassing regular review. So fundamentally,
How
we feel
regular?
Annually, at least. So we feel that...
So who'll be doing that review? Because that's a lot of work.
Well, that's what we do at Proshare, really. And that's why we came up with the Proshare Bank Strength Index, actually, the PBSI. And the PBSI is like a much more transparent basis of saying what bank is a Tier 1. So we're working with, the data, right, from all the banks that have their data, of course, their financial reports publicly available. And so we are going to assign scores, right? And banks that come up with scores in the 50th percentile are regarded as Tier 1. And those that don't are regarded as Tier 2. So just trying to make it as transparent as possible. I think another important observation, one important thing you could take away from this report is the fact that we're saying that, arbitrarily setting that 1 trillion or 5 trillion we need to take a second look at it. We're also making a point that periodically, we need to take a second look at it. Banks should therefore not be regarded as Tier 1. It's not a case of once and for all.
Once you're a Tier 1,
you are ever a Tier 1. It's not once you're a Tier 1, ever a Tier 1. It's not quite the case. We believe that, because, as I mentioned, there are a number of bases for which you want to, consider the performance of banks. So we need to regularly reassess that. Another important reason why it's necessary to do so is that, you see, the Tier 1 appellation is single most important determinant sometimes of what banks get the big ticket transactions, what banks are able to, get so much customer deposits, what banks are able to issue securities at, considerate or, lower yields. and what banks are able to fund big ticket transactions consequently. So if you take all of this together, there is a very, very important need for us to, look at it again. What is a tier 1 bank? And, take a second look at it.
Yeah, and a review of the status every year, according to you. But, to a lot of people, especially those who are not very active in the financial services sector, who are listening to this conversation, they'll be like, okay, so whether it's a tier 1 bank, they have high profitability, what impacts do they make? I mean, the cost of funds now is so expensive. So whether you're a tier 1 bank or not, it doesn't seem CRR has also been complained to be high. So that has also reduced what's available to even though recently the CBN has said that credit to the private sector has increased in the last 4 months. But in the midst of all that is happening in the country at this time and in the world actually, whether you're a tier 1 bank or you're a profit, or what difference are you making to the economy, especially to MSMEs?
Okay, so essentially, whether you're a tier 1 bank or not is something of concern to investors. So at the end of the day, whether we are, we want to borrow from the bank or not, we could be invested in the bank, right? We could own shares in the bank. We could also buy their bonds and buy their CPs. Commercial papers, every now and again, they're issuing one security or the other that you want to invest in. And so I think it's at that point it becomes, crucial for you to know, is this bank a tier 1 bank or a tier 2 bank? Because it determines a lot of things. It determines, most importantly, it speaks to the long-term profitability of the bank and what kind of returns you can expect from the bank. So again, I think at this point, I need to make a distinction. There's that usual, confusion or conflation, as the case may be, between what a systemically important bank is and what a tier 1 bank is. So whereas a systemically important bank is one that, in the eyes of the regulator, is too big to be allowed to fail, because it has very large deposits. And so, if there's a bank run, a lot of people get to lose their funds. But that's really not the concern of a typical investor. The concern of an investor is not so much of financial system stability. That's for the regulator. The concern of the investor is, how much do I expect as returns? And so you want to know, is it a tier 1 bank? What assurances, what guarantees do I have that, there will be so much returns on my investment? So that's why we are taking a second look at it, and we're trying to, come up with something that is much more, as I mentioned, transparent.
So you're looking at it through the eyes of an investor.
Yeah,
so
basically.
an investor, of course, will be interested to see how the bank, how sustainable his investments will be if I invest in this bank, the management, and the transparency of it, I believe. But what about for the person who is looking for funds?
Well, you want to imagine that if a bank is truly a tier 1 bank, relatively, you want to imagine that cost of funds in such a bank will be lower.
Is that the reality?
Not necessarily, but you want to imagine that to some extent, right? They have a much more robust credit risk management, and so they are not running that large risk, of illiquidity, as the case may be, unlike smaller banks. And so you want to imagine that they're able to lend easier, and more to the private sector. And the point you made about private sector lending rising is quite valid, and it's expected, as a matter of fact, because, when you begin to see economic recovery, right, you see credit expansion, unlike what happens where there is a recession, where there is a scale. Banks tend to scale back their lending because, of course, credit performance is problematic at those times.
But we mentioned MPC, which you're a part of the other time, and interest rates now, being higher. That's also good scale back.
Yeah, I agree with you. But again, I think we're looking at a balance, right? So one factor trumping another factor. But then again, it's valid observation that, the MPC, MPR, so the MPR higher by 150 basis points, going to kind of signal some negative sentiments, especially when you want to look at funding businesses through bank loans. You know, it's not likely to be as it used to be in the past, but then again, as the economy recovers from the recession, from 2020 recession, we'll see more lending. I mean, similar played out.
I think we're on the path of recovery until the war in Ukraine.
Yeah,
also.
exactly. But I would still say in the case of Nigeria, we're still recovering, despite, you know, exiting 2021, which largely was supported by low base effect. We still recorded above 3% real GDP growth. So I would still say that we are still on the path of recovery, and maybe that's why we're seeing lending to the private sector. How long that would be sustained is something we'll have to wait and see. Really.
Before the impacts of the war start biting in.
Yeah.
I mean, we're already seeing aviation fuel, long queues at petrol station. All of this, I know, will feed into the figures that we'll see.
Yeah, certainly.
Growth figures, activity, manufacturing, you know, and all of that. I mean, most likely they should. So now that Proshare has this report and are proposing an annual review of Tier 1 banks, so what do you do with this report? What's the way forward?
Okay, so there are a number of takeaways from the report. First of all, we're introducing the Proshare Bank Strength Index, which is, as I mentioned, a more testable approach to determining what banks are Tier 1 and what banks are, you know, Tier 2. Firstly, that report, I mean, that model or that methodology highlights very important metrics that weren't considered previously. We're talking about governance. We're talking about governance metric, like you want to talk about board balance, which wasn't considered before now. We're also looking at, you know, a method through which we're summing, we're weighting, and that's based on data. I think it's important to mention that. So we're not just selecting arbitrarily as we used to have it. We're selecting those particular variables that have proven over time, okay, to be, you know, determinants of long-term profitability. And maybe I should also say this, in subsequent editions or reviews of this, you know, model, we expect that some new variables will come up. For example, you know, it's a trend. The trend is that, you know, there's so much competition, especially in the retail banking end, right, because of the influx of payment service providers that are essentially non-bank financial institutions, right? And so the influx has made, you know, so much competition go on there. And we're seeing banks themselves also up their game in that regard. We're seeing them, you know, put up a fight, and they are increasing their digital earnings. So we're seeing digital income to, you know, as a ratio of gross earnings also increase for many of those banks, right? But as of now, it's not such a very critical determinant of long-term profitability. But we expect that going forward, right, we will see that become a much more critical factor.
Yeah, because I think digital bankers are giving them a run for their money now.
Yeah, the fintechs.
So, yeah, the fintechs. Yeah. If traditional banks do not stand up, they might just get run over.
Yeah, so they're trying to actually put up a fight, although some of them are considering collaboration as a strategy. But at the end of the day, they're trying to protect their earnings, right? So, but at the end of the day, what's likely is that if they choose to collaborate with these PSBs, the likelihood is that they would just be kind of they'll be realigning and maybe diversifying their earnings, because what will happen is they're also earning from these clearing services that they offer to these PSBs. So PSBs are not deposit money banks at the end of the day, so they can't do without DMBs. So there still is going to be some form of collaboration between
more
them.
Like it, more than competition. Well, I would also like to ask that as you review, you know, the factors, also calculate their impacts. I think it's important. I mean, what are banks there for? What's their functionality? Apart from, you know, their profitability and their tiers and all that, they should also be impactful to the real sector. Yeah. So I guess that should also be a component.
No, I can tell you that we actually took a look at that in this report, right? So we evaluated the loan books of many of these banks, right? And we considered to which sectors, we tried to answer the question, to which sectors are Nigerian banks lending, right? So we found that between 20 and 45% of most Nigerian banks' loan book is exposed to the oil and gas sector. Now, that's problematic for two reasons. Number one, we are seeing an energy transition, and we are seeing, the drive for, climate change. We're also seeing the oil and gas sector in Nigeria not do so well. It's maintained consistently. It's been, recording negative growth. And I mean, if you take all of that together, you're asking questions about the long-term sustainability of the earnings for such banks that are so largely exposed to, the oil and gas sector. So again, we also looked at manufacturing. Manufacturing was less than 20% in the case of most banks. That's also problematic because, what economy grows without being industrialized. Then we also try to make a case for what sectors going forward should be considering, banks should be considering to fund. Of course, infrastructure funding is a major one, but then again, there's been argument about whether banks, are in the position to fund public infrastructure, which, you would consider to not be so bankable. But then, the counter argument we made is that, there are several models that can be, adopted. There's the PPP model. There's also the financialization model that can be adopted to ensure that despite being a public infrastructure project, it can still be profitable to private concerns, banks.
Okay. And I know the federal government has a lot of programs also trying to bring in the private sector into infrastructure funding and all that. Well, thank you so much for this expose into your report. We do look forward to it being impactful and making changes in the financial services sector. Thank you so much, Abdul Kudus Isiaka, economist with Proshare. Let's take a break now. After the break, AFEX Commodities Market is next. Do stay with us. This is Business Morning on Channels Television. You're welcome back. Well, mixed sentiment is what was recorded on the AFEX Commodity Market Summary for week-on-week, although that week-on-week change was almost marginal in most cases. But we have Suleiman joining us virtually from Ikoyi here in Lagos to give us the details. Hi, Suleiman. Good morning.
Hi, good morning, Ine. How are you doing?
Doing good, Suleiman. So give us a rundown of market activities for the weekend at the 20th of June.
Yeah, for the weekend, there was a little bit uptick in market activities, but as you mentioned, it wasn't that significant. So with the total turnover increasing by 13.19% over the week, from 0.91 billion naira in the previous week to 1.03 billion naira for the week under review. So the total volume traded on the exchange, however, declined by 2.28% from 3.2 million contracts in the previous week to about 3.1 million contracts for the week under review. The number of deals traded on the exchange went up a little bit from 371 deals in the previous week to 488 deals in the past week, representing a 31.54% upturn. The AFEX Commodities Index, the ACI, closed the week in the green by 4.47%, moving from 471.41 points to 492.47 points. However, the AFEX Export Index, the AEI, declined marginally by 0.60%, moving from 192.73 points to 191.58 points in the just concluded week. So breaking down the volume of contract traded on the exchange, the volume of maize traded on the exchange witnessed a significant increase over the week, going from 1.1 million to about 2.2 million contract traded. Cashew also witnessed similar increase, going from just 408 contract traded to 350,000 contract traded in the week under review. Soybean, sorghum, ginger, and padres, however, all witnessed decreases in volume traded, with sesame and cocoa closing the week flat. So in terms of price performance of individual commodities on the exchange, maize rose by 20.18% during the week under review, representing a 44.26 naira increase to close the week at 263 naira 62 kobo. Sorghum also returned a significant price increase of 27.99%, representing 62.87 naira increase to close the week at 287.50 naira. Ginger rounded up the list of gainers during the week, increasing by 4.77% to close the week at 1,009 naira 0.62 kobo. Soybean, cocoa, paddy rice, cashew nut, and sesame all closed the week flat, maintaining the same price levels from the previous week. Over to you, Ini.
All right, Suleiman, thank you so much for that. And as you guys would always say, if they want more information,
you can always go to our website at africanexchange.com or go to any of our social media platforms at afexnigerian.com.
All right, Suleiman, thank you so much. Talk to you again for that update from the market.
Do have a nice day.
You too. Let's switch over to Abuja now, where we have Adetola Owolabi, National Sales Manager with AFEX, to talk about the program that AFEX has started. Hi, Motola Adetola, good morning. Well, I guess you're talking about the Input Financing Program, which is ongoing, an initiative that AFEX says unlocks financing from retail and institutional sources for the production of activities of smallholder farmers. These people have a whole lot of number when we talk about agriculture in Nigeria. And this was created to align with the United Nations Sustainable Development Goals. Adetola, good to have you on the show. First of all, I guess, help us to understand this program of yours, which you say you've been working in disbursing funds to farmers in the past 6 years.
Thank you, Ini. Good morning.
Good morning.
Yes, the Input Financing Program of AFEX has been going on for about 6 years. We understood that there was a gap between supply and demand of commodities in the nation as a whole. Demand was way higher than the supply, and so to bridge that gap, the input financing started, where we then give out quality inputs to smallholder farmers, thus helping them increase their production, which, I mean, by default will then increase their income, causing them to grow more. But most importantly, will then increase the supply of commodities in the country to, if not meet demand completely, at least try to increase the supply and aim to increase demand as the years goes by, just so that we can reduce export into the nation, so that, you know, the economy can grow as well.
So in 6 years, what impacts would you say this program has had on the nation's food basket?
I would say that the smallholder farmers are essentially 90% of the populace that produce the commodities that we consume as a nation, and that also processors use to consume finished goods. The assistance of AFEX, or rather the input financing, has helped that they can now grow their farms. I mean, we had cases of farmers starting from 0.5 hectares to now doing as much as 3 hectares, increasing their income by 3x. I mean, solving for poverty, but at the same time also, you know, giving a lot of commodities, or increasing supply rather, in the nation, and, you know, just ensuring that processors are able to then get commodities right now across the nation, but also ensuring that you and I have enough food to eat, but most importantly, helping that the economy as well grows. But I mean, if you're referring to impact in terms of the farmer directly, I would say that it has improved their livelihood at least by 3x.
Wow. And, well, I think one of the domineering conversations everywhere, not just in the business world these days, is the war going on in Ukraine, Russia invasion into Ukraine, and what it has done, especially to food supply and production in countries around the world, Nigeria included. And then one of those areas affected has been fertilizer, because we do know that Russia is a major producer of potash that's used for fertilizer. How has that affected your program and, you know, the price of fertilizer? How has it affected your program?
So, if you look at the cost of fertilizer this time last year, fertilizer on average, NPK was probably going for 9,005, and I mean for premium probably at 13,000. Today, that same fertilizer is going for about 18,000 naira at the minimal and about 21,000 naira at the maximum, and that's almost a 70 to 100% increase already. But most importantly is also the fact that, I mean, you have quite some form of difficulty even in transporting, I mean, in terms of logistics to even move that fertilizer. Cost of diesel has gone up as well. And so if you add that cost to the cost of the fertilizer today, I'm not sure how many people are able to disburse, but luckily for us as an organization, we have tried to keep the faith with our farmers and ensure that we still have these inputs for them, and keep the price in a way that they can benefit and be productive at the end of the day. Just to add to that is to say to help ensure that they then have maximum production is that we then initiated ensuring that this year at least 60–70% of them, if not 100%, are able to use improved varieties of seeds while planting this season. This should help boost their production and of course then give them increased supply that when they market on the exchange can then cover for the high cost of inputs that they have acquired.
All right, and what's your goal? You know, what are some of those things you want to achieve in the 2022 disbursement this season?
So like I said initially, the first is to ensure that there's increased production. I mean, to grow their output from the previous average of about 3.5 to at least 4.5 or 5 tons this year. And to do that, we had ensured that we give out improved seedlings. But most importantly is also to help intensify our extension services to support our farmers at every step of the way, sharing with them also information on the weather and just guiding them through the season to ensure that at the end of the day, they have a very beautiful, bountiful harvest. And that way their pockets can be full.
Yeah, their pockets can be full and then there'll be more food to go around in the country. That will make,
absolutely,
you know, not
yes,
just the smallholder farmers, but I mean, all Nigerians happier. Thank you so much, Adetola Olabi, National Sales Manager with AFEX.
Thank you so much, Amy. I appreciate it. Have a beautiful day.
And you too. We'll head to the market, but we'll take a time off first. So let's go to that market now, and happy to say that Nigeria's equities market recovered yesterday. I don't know where that came from, but the market was up. The Proshare index was 0.66% at the close of trade yesterday. A lot of investors, I guess, maybe coming back to plunging some of those funds in the market. Well, the Proshare index was up 0.66%. Equities cap 27.544 trillion naira. We have not gone back to that 28 trillion naira yet, but at least maybe we're on our path there. We saw that the activity chart was still in the red, but a bit of recovery compared to the day before. Deals was actually lower than the day before. Value 2.74 billion naira. And now let's go to the sectoral performance. You know, we've had eyes on banking for a while, and I think 2 days now, banking sector is recovering 0.38% yesterday. Good news for investors there. Consumers actually still down. Insurance is down. Industrial goods, wow, 3.86. That's a lot. Industrial actually drove the market down the day before, so now when you have it in the green, that's good news for a lot of people. And then top trades for yesterday in the equities market had Transcore, UBA, and GT Core. So those are the drivers of that green that we saw in the banking sector earlier. Let's look at the NASD market there. It was also back up in that green, 0.57% market cap, more than ₦1 trillion. It had only 10 deals yesterday, valued at 4.19%. Heading to the fixed income market now, starting with the federal government bonds. We had an auction on Monday. I do hope our guest will tell us how that went. Okay, but our federal government bonds yesterday, there were 24 deals worth 5.3 billion naira. NTB, 58 deals. We're having a lot of activities in this market these days. And then we do see, as usual, the short-term securities are attracting more people. But let's get Chuka Nwachukwu, head bond trading with the United Bank for Africa, UBA, now joining us to tell us some of the backstory in the fixed income market. Hi, Chuka, good morning.
Good morning, how are you?
Great, great. Good to have you on the show. So let's start with how the markets went yesterday. How was the market yesterday?
Well, it's been a pretty quiet market, though it started on Monday with a bond auction, like you mentioned earlier. So we saw 225 billion on offer across the three maturities of 2025, 2032, and then 2045. We saw yield slightly move upwards. The 2025 came out at 10.1 from 10%, which is about 10 basis points upward movement. And then the 32 came out at 12.5 from 12.45 the previous auction, and then 2042 came out at 13. Came out at 13.15 from 13% the previous auction. And so the markets have actually followed this trend. We've seen a slight movement in yield over the couple of days and weeks, and then we expect that this will continue going.
All right, please explain to us. We do notice that the short-term securities seem to get a lot of attention. For instance, in the CBN bills, we have the October 2022 had 20 deals yesterday. August 2022 had 38 deals. July had 30. In the NTB, we had the November 2022 had 35 deals. You know, so explain to us what's the relationship, you know, in this these securities that are going to mature very soon, getting so much attention.
Yeah, well, it has to do with the liquidity constraint in the market, in the system. So you see people selling off their short-end deals in order to provide liquidity to enable them to fund their activities. So that's why you see a lot of activities on the short end of the curve.
Okay. All right. So what's the expectation for today? Are we still expecting a quiet market?
Yeah, today is the settlement day for the bond auction on Monday. And so we expect that the market we've traded now for 45 minutes. We've seen a little bit of activity, especially on the bond side. We've seen those who won at the auction and those who lost at the auction. So we've seen a mixed trading sentiment. Those who lost are trying to cover from the market, and then those who won are obviously trying to sell. So we are going to see this mixed sentiment will continue to Friday or probably the end of the week. On the T-bill side, we've seen also activity, like you said earlier, on the shorter end, and then we expect that this activity we go on towards the end of the week, especially as the month end comes to close.
All right, Chuka Nwachukwu, head bond trading with UBA. Thank you so much for the perspective you brought to the program this morning.
Thank you very much.
And so we will head to London now, but that will be after the break. Do stay with us. This is Business Morning on Channels Television. Yeah, welcome back. Well, in the UK, as expected, inflation has risen, getting very close to that double digit, 9.1%. And the Office for National Statistics has said that food and non-alcoholic drink prices are major drivers. Juliana, good morning. I don't think it gets any more real than this. You feel it, you live it, and then we see it in the figures.
Absolutely. I think that's a really nice way of describing it, actually, Innie. And in fact, as soon as this data was released by the ONS, showing that in May, inflation jumped by a percentage point to 9.1%, is the reason why the UK blue chip index shares fell. They fell by over 1%, because I think there are fears that actually the UK could be heading into recession. And as you said, this is not just data, it's hitting ordinary people the hardest. Basically means your pay is not going as far as it once did. And you have to go back 40 years to a time when Britons were living like this. That is the real pressure. As you said, I think now it's getting pretty serious, because it's not just energy prices, it's not just fuel, which we've been talking about consistently. It's now starting to hit at the checkout. Yesterday, there was data released by Kantar showing that inflation in the grocery markets are starting to hit, are now at a 13-year high. And that is the surge in inflation that we're seeing in the month of May. So we're seeing it in household goods, we're seeing it in furniture, we're seeing it in food, and we're seeing it in drink. I think now the pressure is definitely going to be pushed back to the central bank. Last week, the Bank of England did raise interest rates by 1.25%, but that came after, across the pond in America, Jerome Powell in the US Federal Reserve, they went much further at 0.75%. Now, Jerome Powell is due to be speaking to a committee at the Senate today. So I think a lot of economists are going to be listening in to see what the world's largest economy are going to be doing to try and avert this runaway inflation and also try to stop a recession from taking place. But certainly here in the UK, the Chancellor, Rishi Sunak, he's been speaking. He's been saying, look, you know, the government are doing all they can to support the 8 million vulnerable households. They've got this £650 package, which is going to start coming out next month. They're also adding an extra £150 and an extra £250 if you're disabled or elderly. But, you know, yes, it is real. I think we keep talking about it. We keep on hitting the tennis racket back and forth, don't we? Because I know things are really tough in Nigeria as well at the moment, Innie, but they are indeed, Juliana, certainly tough here.
Juliana. We do have long queues at filling stations in all major states in Nigeria at this time. So inflation, like you know, in Nigeria is much higher than that. We've already hit that double digits a long time ago. And even in the US, you know, President Biden is talking about getting rid, at least temporarily, of gasoline tax. You know, that's one way. We're waiting for what Nigerian government will do for the people. Well, and we have that strike, the rail strike, and this will only make things even worse.
Goodness, strike? What strike? Yes, no, there is strike. It's another day of travel chaos for commuters trying to get in and about, not just London, the big city, but other cities and areas across the UK. Yes, the actual designated days were yesterday, Tuesday, Thursday and Saturday. But as we heard from Network Rail and the government, expect chaos throughout the week. And that's exactly what commuters have been expecting this week. Today, we've been hearing so many stories of people that really struggle to get out and about across the UK yesterday. Today, I believe trains are running at about a 60% capacity of what we were used to expect. But there is going to be a political showdown. Today is Wednesday, it's PMQs. So we are expecting the Labour leaders, Sir Keir Starmer and Prime Minister Boris Johnson, to go head-to-head over what to do with the strikes and the summer of discontent, which people are talking about, because we just heard from the National Union of Teachers. They're also saying they could strike if Nadeem Zahari, the Education Secretary, doesn't increase pay. We know inflation is running at 9.1%. Pay rises for public sector workers at 1%, 2% just doesn't cut the mustard. So, yes, expect more sound bites, more political showdowns and mustering at PMQs today. But the strikes do go on. But we are hoping that talks are continuing between RMT, the union, and Network Rail, the bosses.
Yeah, I mean, so many threats of strikes. I just hope, I mean, the country will be held, well, stop working or something. Let the talks, you know, have some fruit. That's what we look forward to, Juliana. Thank you, and we'll talk to you at 1:30.
Thank you.
Let's head to the crypto space now. A little rebound yesterday. I don't know if that's being sustained. At least the equities market is back. That's what I'm happy about. I don't know about Ladi.
Well, talking about strike, I see the buyers are on strike in the crypto market because we're seeing much selling pressure. The resistance about 21,500. Still in extreme fear, but much better, about 11 points, but still fear in the market, showing sentiment in total crypto space. I've seen that market cap there struggle. It's down 4% this morning. Volume traded down 8%, and we see Bitcoin dominance there inching downward at 43.44%. And we see Bitcoin there. It got some selling pressure at 21,500, bringing the price down to $20,106. We're still seeing a lot of volatility in that market, and Bitcoin ranging between 21,000 and 19,000. Going to hit 19,000 with the way it's looking. It's down 4.62%. Volume traded $28.32 billion, and Ethereum is not left out. Trying to hold that $1,000 support, looking quite weak, but seeing selling pressure also with Ethereum. It's down 6.57%. Volume traded $14.45 billion in the Ethereum market, and top alts market cap is all red. We're seeing sell-offs too with major altcoins in the market. BNB there down 4%, and we see the biggest downer. That's Cardano, 46 cents. That's down 7.12%, and eCash there down 3.10%. XRP, 32 cents, down 2.04%. So we're seeing a red market this morning. Let's bring in Solomon Amunde now, digital market analyst. Hello, Solomon.
Good morning, Ladi. Good morning.
Morning, Solomon. Great to have you. Well, we're seeing a lot of selling pressure in the market this morning. I was hoping, we'll see more buying pressure continue from yesterday, but it looks like the buyers are on strike, as I told Ini earlier. How are you seeing the market?
Yeah, what we're expecting currently in the market is we still expect Bitcoin to come down to about $19,000. We have some form of liquidity there that Bitcoin needs to tap into, then before we make a run for about $22,000 and $24,000. So I'm still expecting a pullback to $19,000 within the week, most likely by Friday.
And I remember you did predict the last time that Bitcoin would hit that 18K, and it actually did. And so I guess you've looked into your crystal ball again. But Solomon, I see Solana NFT marketplace. That's a Magic Eden. It closed a $130 million Series B round of funding at $1.6 billion valuation. But this is a bear market, and we're seeing this kind of investment. Do these investors see what retail is not seeing right now?
Yeah, I believe investors are in the market long term. They are looking at 5, 6, even 10 years return on investments, whereas most retailers, they are looking for just something that will give them quick return, maybe 6 months at most. Most retailers ever want to buy a project and wait for up to a year. And let's not forget that Magic Eden, it actually has, they have no token basically, and how they generate their revenue is based on fees from these NFT trades and purchase. So these investors they're actually seeing what retail investors are not really seeing, basically, because they are not buying into tokens. And maybe tomorrow Magic Eden might have their own token launched. We don't know, but for now they have none. And for now, I believe these investors would be earning their returns on investments based on commissions from the trades made on Magic Eden, basically.
And I'm talking about, bear markets. How are those NFT JPEGs looking at this time? Are they still selling for record amounts, or are traders shying away from those kind of purchases at this time?
Definitely not. Definitely not. Most of the blue chip NFT projects that were being sold for over $500K, over $1 million, they all crashed by as much as 90%. Like we're seeing most of them being sold for about $10,000, $30,000, but initially they were sold for as high as $500K. And this is also largely due to the fact that the token that was used to pay for that NFT, like the Ethereum, also crashed. I mean, Ethereum crashed by almost 70% to 85% from its all-time high, which was over $4,000. So that is basically what we are seeing. The blue chip NFTs, right now, they are all at least 80% down from their all-time high. And for those that are interested, this is actually a good time to purchase some of those NFTs, not all of them, but a few of them.
I guess no market is safe in this crypto space. But looking at the pattern we're seeing right now, the cycle we're in the crypto space, what trading strategy would you recommend? Are the day traders back in action at this time, or is it still long-term investing?
Right now, it's a time for day trading, if you ask me. Swing trading is actually best, making use of RSI, buy low, sell high. No need to go so long term right now, basically. But you can do long term for spot trading, but for derivative, the best strategy now is day trading with at most a 1 hour time frame. That's cool.
Right. Well, buy low, sell high sounds so good, but it seems like it's the hardest thing to do in most of these markets. Thank you so much, Solomon.
Yeah, exactly. All right. Thank you.
All right. Now, so look at the top odds there. We see it's all red. Top 5 gainers. We see Shiba Inu there. That's one of Ini's favorite there. And the top gainers list is up 15% this morning. Still not up to a cent. Really cheap there. Zilliqa there, 3 cents, up 9.36%. And we see Leo token there up 8.96%. Looking at the top 5 leads, we see double-digit losses with ApeCoin there at $4.11, down 14%. Link, one of the Link Marines there, we're seeing it sink down about 10% this morning. So it's more of a red market, Ini, but buying low and selling high seems quite hard to do in this market.
Hard to do, the most, logical thing to do.
Yeah, it seems quite logical, but finding
difficult.
that bottom, finding that low, it's really hard.
How do you know when it's gotten really low?
Exactly.
All right, Laddie, thank you so much. And that's it on the program for today, this midweek edition of Business Morning. But we have 2 more episodes for the week, so it's not over. We'll do it again tomorrow, God's grace. But 1:30 Business Incorporated will be here to give you updates from the world of business. I'm Ini John Mekwa. Enjoy the rest of the day.